Hello everyone. So this is third video in series of our discussion on urban local bodies. Prior to this, we already have released two another videos on urban local bodies. In the first video, if you remember, we had discussed the basic information regarding urban local bodies. We had differentiated between municipal corporation, municipal council, nagar panchayat, how these designations are done. In the second video, we discussed various kind of urban center. Again, we discussed this municipal corporation, municipal council, nagar panchayat, notified area committees, township, town area committee, cantonment, port trust. So these kind of urban center we had discussed in length in the second video. So this is going to be the third video in a series of our discussion on urban local bodies. And one suggestion I'll again extend you that this chapter urban local bodies should not be read independently. This chapter you should be reading in cohesion with this Panchayati Raj institution, because there are certain common topics or the common issues that both these Panchayati Raj institution and urban local bodies face. Right, in the second video when we were discussing, or rather in first video itself when we were discussing this role of a state election commission or state finance commission, I had just given passing reference about this particular topic. But because when in Panchayati Raj, when we were discussing this state election commission and state finance commission, there we had spent extensive amount of time, right? And whatever role that state election commission and state finance commission or the tenure of Panchayati Raj institution, so these are something that is common between state election Panchayati Raj institution and urban local bodies both. If the term of district panchayat or intermediate level panchayat is 5 years, the similar term urban local bodies also does enjoy whatever role that has been envisioned in sub articles of 243 for state election commission in relation to Panchayati Raj institution. Similar role state election commission has to perform for urban local bodies as well. As far as role of state finance commission is concerned, similarly state finance commission also have similar role to perform for both urban local bodies and these Panchayati Raj institutions. So these are something that is common between Panchayati Raj institution and urban local bodies both, and that's why I had recommended, means that's why when I was discussing this urban local body chapter, there I did not spend much time on role of state election commission. There I did not spend much time on state finance commission and other things. If I talk about another common topics, right, like disqualification parameter. If a ward councillor has been elected, now what are the grounds on which a ward councillor services can be, or his tenure can be, or his candidature can be terminated. Similar grounds we do have for Panchayati Raj ward members as well, right? So those are the things that we did not discuss in this urban local bodies. I simply recommended you to refer to Panchayati Raj institution. So even today's topic that we are going to discuss, that is something common between Panchayati Raj institution and urban local bodies both. So what are the topics that is scheduled for this video? So in this video we'll discuss the sources of finance for Panchayati Raj institution and sources of finance of urban local bodies, right? From what all sources these Panchayati Raj institution, district panchayat and intermediate level panchayat or village panchayat do get funds from. What are the sources of finances for these urban local bodies, this municipal corporation, right? Their sources of finance can be from union, so union can provide them loans, union can provide them in form of some grants under article 280. Then they do get funds from what you call state as well, in form, it can also be in form of devolution of funds, it can be in form of, what is the meaning of this devolution and all will clarify when we'll get into the core of this video. So rest assured that we'll have a discussion on those things. Here I am just giving you an idea that what is going to be approach or what is going to be the topic for this particular video, right? So the sources of finance again for the Panchayati Raj institution and urban local bodies is common. So both these bodies, Panchayat, what is this? What is the difference between Panchayati Raj institution and urban local bodies? So these are nothing but these are entities of local self-government, right? When I am saying Panchayati Raj institution, I am talking about local self-government at the rural level. When I am talking about urban local bodies, I am referring to these municipalities, municipal corporation or nagar panchayat, that is local self. These are tools or these are entities, political entities that has been created for local self-government at the city level, right? So that is the difference between Panchayati Raj institution and urban local body. So this is the first topic for this video, that is sources of finance, and that is common sources of finance for Panchayati Raj institution and urban local bodies is something that is common between both Panchayati Raj institution and urban local bodies, right? What are the issues that is plaguing this financial mechanism? So we'll see, right, when state is financing, when union is financing these urban local bodies, right, what are the issues? Are they providing whatever payments or whatever money that they are extending for the implementation of scheme or for the grant, are they providing that money or finances in timely manner, or it is just in the last 2 months or 3 months they are providing the funds, and that is leading to something called March rush. So what is this March rush? Again we'll discuss. So yes, finances are being provided to them, these Panchayati Raj institutions, but what are the issues with that kind of financial mechanism that we do have with the panchayat? So what are the issues that is plaguing? Then reasons for suboptimal performance of urban local bodies and Panchayati Raj institutions. So there were some stated objective when you had the 73rd and 74th constitutional amendment in 1992, right? So there was a purpose behind conferring constitutional status to these Panchayati Raj institutions and these urban local bodies. What were the stated objective? Means I am talking about stated objective. When I am saying stated objective, what I mean is that there were some goals, there were some visions, right, that had been stated in 73rd and 74th constitutional amendment, and this stated vision has not been mentioned in this slide. So let me tell you this verbally. Listen this carefully, right? So the stated objective were three. The first stated objective was that we had to take this democracy, right? We keep talking about democracy, but the kind of democracy that we do have at parliamentary level or assembly level, that is called representative democracy, that is not direct democracy. So after successful attempt on this parliament, after successful experiment of this assembly, right, for 40 or 50 years, we tried to get this democracy little deeper. We created another level of this political governance, right? So the first attempt was that we have to take, or the first objective was that we have to take this democracy at the grassroots level. The second objective was the political empowerment of the people. What do I mean by the political empowerment of the people? So see, everybody, you have this assembly, you have this parliament. Now it is not possible, right? In theory, if you speak, everybody is eligible to contest this election of MLAs. Everybody who fulfills certain criteria, if he is a citizen, if he has attained certain age, then he is eligible, he or she is eligible to contest this election of member of legislative assembly and member of parliament, right? This parliament. But if you think practically, right, there is huge muscle power that goes into fighting, that goes into contesting this election. There are huge level of resources, finances that you need if you have to contest these kind of elections. Now what do I mean by this political empowerment? So from political empowerment, it was envisioned that the people who could not contest this election for MLAs or MPs, right, they can contest, they can at least think of contesting this election of ward councillor, they can think of contesting this election for Panch and Sarpanch, right? So that kind of thing that had been envisioned, because in villages it is easy to contest the election. At least when I am saying easy, it is a relative term. I am comparing it with the election of member. Although even to contest the election of these ward councillor or ward member, right, there are huge amount of resources again go, but that is somewhere not closer to these MLAs or MPs, right? In the MLAs, if you compare the MLAs election, what goes into, and when you compare what goes into this election of ward councillor, so that is a lesser amount. So a normal person can think of, if his character is good, right, there is another candidate who is completely contesting on this financial power, and there is another person who want to contest this election solely of this honest credentials in the village, then he can, at least this honest person can think of, because people in the villages or people in the small town, as far as this ward council election is concerned, you know these people directly, means you have been there for 20 or 25 years, so you know that which person is like who is trying to loot our vote and who is trying to take our vote for good purposes. At least you can differentiate. So contesting election at the village, and that's what I am talking about, the political empowerment. If I give you a figure, right now we do have 3.1 million of local representative in India, right? In the world, if you go to any country, there is no country at the world level which would have given this much, means 31 lakh of local representatives. So this 31 lakh local representatives are what? Today, for 5 years or 10 years, they took experience of governance at the local level. 10 years down the line, they can think of contesting election of member of legislative assembly, because they would have, means for 10 years, if a person would have been ward councillor, he knows that how to govern the people, how policies are planned, how execution is done, and that is nothing, political empowerment. Out of 31 lakh that I am talking about, out of that 31 lakh, there are 13 lakh only women. So that is nothing but empowerment of a particular gender that has been hitherto remained ignored, right? We have reserved, through this mechanism, we have reserved seats for SC community, for ST community. So those has been, though these people have remained weaker sections, hitherto they had been described as weaker sections of our society. So that is again nothing but political empowerment. So the first stated objective was getting this democracy closer to the people, and second stated objective was political empowerment of different sections of the society. The third stated objective was to take this governance, to take the administration closer to the people. So these were certain objectives of the 73rd and 74th constitutional amendment. Now in this chapter we will try to assess that to what extent we have been successful in that attempt, whether we have been able to bring this governance and administration closer to the people to the extent that had been envisioned in 73rd and 74th constitutional amendment, whether we have been able to politically empower certain sections of society that we had thought of, whether we have been able to penetrate this democracy deeper down the line, deeper to this third tier of governance, right? We had this first tier of governance at the union level, that is parliament, second tier of governance, that is at assembly level as a MLA, and this is the third tier of governance. So these three questions, or these three stated objective, on those three stated objective we'll assess the performance of these institutions, and you will find that these as far as political empowerment was concerned, on that angle, yes, we have been successful, because we have, as I gave you that figure, that we have these 31 lakh of people, a local representative that has been selected today. So that is one of the highest, not one of the, actually highest number across the world. No country in the world has given this figure or has given representation to so many people by any tier of governance. So on that count, yes, we have been successful. Whether this democracy has penetrated deeper down the line, so yes, to that extent as well, right? You do have, means yes, means as far as institution of Gram Sabha, so even at the village level, right, not for designing every policy, Gram Sabha consent is not taken every time. There are some progressive states like Tamil Nadu or Kerala or Rajasthan where Gram Sabha do sits, and they do sit regularly whenever a planning or whenever a decision, a priority decision for that particular village or town has to be taken. But most of the state, right, this institution of Gram Sabha that had been envisioned, right, so on that count we have not been successful, right? So on two counts, on politics, whether we have, the third count was governance and administration closer to the people. Have we gone closer to the people? Yes, to that extent as well, to some extent we have been successful. So we will see, means in the second leg of this video, we will see that if these 73rd and 74th constitutional amendment stated objective have failed, what were the, means failed would be a wrong word, because I already told you that on two counts we have been successful, right? So failed would be a too strong word, so that kind of protect yourself or save yourself from using these kind of terminologies that we have completely failed. See, as far as implementation of a particular scheme. Whenever a question in mains is asked sought from you that whether this scheme has been successful or whether the scheme has been failure, so you need not to answer, you need not to respond those questions in the binaries, either yes or no. Even if the scheme or implementation or execution of a particular scheme is failed, you have to present that in form of challenges. So there were certain challenges and we could not, means rather than focusing on what were the problems, you have to orient your mind towards the solution, right? You will have to be solution oriented rather than problem. Yes, you can, means if the dimension of the question is about the problem, so emphasize on the problem, but more than emphasis on this problem, right, you will have to concentrate. You have this section called way forward, right? So in that way forward section you will have to have this, that okay, we have been, means on these counts there were certain challenges. Instead of using that word fail, right, you will have to highlight that yes, there were few challenges, the challenges were little difficult, so because of so and so reason we could not overcome these challenges, but then there are ways out, right? So that is how you will have to attempt the question. So we will see in the second leg of this video, we will see what has been the reason for the suboptimal performance of Panchayati Raj institutions and urban local bodies. So by now you will have an clarity on that what is going to be scope for this particular video. So let us start our discussion from this first topic, that is sources of finances for these Panchayati Raj institutions and urban local bodies, and what are the issues that is plaguing these financial mechanisms. So when we were discussing the introduction of this video, I had stated that union also finance this Panchayati Raj institution and urban local bodies. Then you do have state financing these Panchayati Raj institutions and urban local bodies. Then the third category, third major source is their internal resources, right? So these urban local bodies and Panchayati Raj institution tax people, and they also have some non-tax mechanism. So what are these things, we will discuss in detail in the next slide. So if I talk about union, so what are the ways in which union finance these Panchayati Raj institution and urban local bodies? So union does finance in two ways. This is the first way and this is the second way. So under article 280 you have this constitution of finance commission. When finance commission is constituted by union, then this finance commission at the union level is going to recommend some kind of funds for the urban local bodies and Panchayati Raj institution, and union government does have this healthy practice that they do follow the advices that has been extended by these finance commissions. So following the advice of union finance commission, center transfer these funds to these Panchayati Raj institution and urban local bodies. So that is the first source. The second source, or the second way by which union finances these Panchayati Raj institution and urban local body, is for implementation of various kind of schemes. So you do have these two kind of schemes, central sector scheme and centrally sponsored scheme. The shorthand for the central sector scheme and centrally sponsored scheme is same, CSS. What is the difference, by the way, between this central sector scheme and centrally sponsored scheme, right? So there are three questions, 3 MCQ that is appended at the end of this video, and you are supposed to attempt that. In addition to those 3 questions, consider this also as a question, the difference between centrally sponsored scheme and centrally sector scheme, right? So forget this central sector scheme. As far as implementation of this centrally sponsored scheme is concerned, right? So center designs this centrally sponsored scheme, but ultimately the implementation of this centrally sponsored scheme is done by these Panchayati Raj institution at the rural setting, in the rural setting, and urban local bodies in the towns. Now when they are implementing authority, the funds that were meant for the implementation will go to these Panchayati Raj institution and urban local bodies. Now there are various issues that is involved with this kind of fund. We'll discuss what are the issues that is involved with this kind of funding mechanism, right? So that is, I hope you will have clarity on that, how many, in what all ways union transfers fund to these Panchayati Raj institution and urban local bodies. If I talk about the state, so these are 2 ways through which state does funding to these Panchayati Raj institution and urban local bodies. So if you remember, you have this article 243I which talks about constitution of State Finance Commission, right? State Finance Commission came into existence after the 73rd and 74th constitutional amendment, because in 73rd and 74th constitutional amendment, under under this article 243I, which envisioned that there shall be commission, or there shall be call for the state finance commission by governor every 5 years, right? And what is the job of this state finance commission? So the job of state finance commission is to assess the level of fund that is available at the disposal of this state, and depending on, and the scope of this finance commission I am talking in relation to this Panchayati Raj institution. Otherwise the term of reference or the scope of finance, state finance commission, is very large. So those all aspects I am not talking about. The only aspect that is relevant for this chapter, that aspect I am talking about. So the scope of finance commission in relation to the Panchayati Raj institution is this, that see, all the taxes, whatever taxes or whatever resources that is lying at the disposal of the state, from those resources or from those taxing mechanism, state has this huge amount of fund. Now the state finance commission will assess that what are the funds that is lying at the disposal of the state, and out of that fund how much money or what resources should be transferred for the functioning, for the proper functioning of these Panchayati Raj institution or these what you call urban local bodies. Now what are the problems associated? So that transfer will be called devolution. Now there are certain issues that is involved with this kind of devolution on the recommendation of the state finance commission, that again we'll discuss in the detail in the coming slide. The second mechanism or the second way through which the state funds these Panchayati Raj institution and urban local bodies is through grants or loan, right? If any urban local body does have, or if any district panchayat does have sound accounts, then they can seek this loan from the state. So state can loan them, or state can provide any kind of grant for any kind of special particular service, right? So that is also second mechanism for through which Panchayati Raj institution and urban local bodies get money from the state. So these are the fourth mechanism, right? The fifth mechanism is internal resource generation. What is this internal resource generation? So as I already told you that there are some taxing mechanism. So there are certain area which has been allowed, like cinema, like entertainment, like these bazaar taxes, like these house or property taxes or land improvement tax, right? And there are certain non-tax mechanism as well through which these Panchayati Raj institution and urban local bodies, that is municipality, municipal corporation, do get money. So that forms part of their internal resource generation. What are the problems associated with this internal resource generation? That again we'll discuss. So as far as this financing mechanism is concerned, we'll approach this financing mechanism from two angles. We'll see, we already have seen that these are the sources, or these are different sources. So you have this union financing these Panchayati Raj institution, you have this state financing these Panchayati Raj institution and urban local bodies, and the third major mechanism is internal resource generation. So we'll see what are the problems with these kind of financing mechanism, what are the problems associated, and then we'll try to figure out some recommendation that to allay or to mitigate those kind of problems with that kind of financial mechanism. What are the things or what are the way out that should be done to mitigate their bad effects? So we'll see those from two angles, that is what is the problem and what could be the solution. So let us start our discussion by taking these topics one by one. So if I talk about the devolution of funds from state, so devolution, as far as devolution of funds from state is concerned, state, we already have seen that on the recommendation of the state finance commission or in form of loan or grants, right, state does help these Panchayati Raj institution and urban local bodies. When I am saying help, it should not be help, rather under article 243G, you had been this thing had been envisioned. Article 243G, it had been envisioned that there would be transfer of functions, and there would be, means whatever function that is being transferred by the state, in relation to those functions there will be equivalent transfer of funds as well. If you do not want to devolve the funds, you should give them taxing mechanism, right? You should provide them the areas in which they could tax, and the funds that is being mobilized from those kind of taxes, they should be able to fulfill those functions that you are transferring. So in 73rd constitutional amendment, you have this 11th schedule in which you do have this 29 items. In 74th constitutional amendment, you have this 12th schedule which does have 18 functional items. Now let me tell you factually that out of 29 items that had been envisioned in this 11th schedule, out of this 29 item, most of the states, or the at least progressive state, has transferred 22, 23. Some state has gone on to extent to transfer 25 functions as well, although states like Bihar or states like this Uttar Pradesh have transferred not more than 18 or 17 functions. So out of 29 function, if you are transferring on an average 21 function or 22 function, that is a good parameter, right? So good on that front. As far as transfer of function is concerned, most of the states have transferred the functions, but when it comes to transferring the resources, they are not properly devolving the fund, or they are not providing the taxing mechanism, the kind of taxing mechanism that municipal corporation has been provided or Panchayati Raj institution has been provided. From that taxation mechanism, they do not get enough funds to fulfill the functions that has been assigned to them, right? Whatever 22 or 23 or 21 or 18 function that has been assigned to them from the state, right, to fulfill those obligations, they do not have enough funds, right? And to fulfill those functions, when they do not have their own funds, they have to rely on the devolution of the state. Now let us try to understand that we are a democratic nation, we are a democratic, states are democratic. Now in a democratic state, there would never be more finances, there will be more of demand, right? From various sections of society, there will always be demand. As far as funds are concerned, as far as finances are concerned, be at union level or be at state level, you will have less amount of funds, right? There would be competing demands from various sections. Some section will say that we want employment, some section will want generate this development, some section to focus on health, some section will say focus on education. So there will be competing demand and there will be lesser amount of funds always. So this is going to be the case always, and in that kind of situation, you will see that the devolution of state in form of loan, in form of grants, or in form of whatever, means on even on the recommendation, whatever recommendation that is being done by the State Finance Commission, that hey, can you transfer, means you do have this much of resource, out of this much of resource, right, you transfer this much of resource to these Panchayati Raj institution. Now at the state level, see, at the union level, there is a healthy practice that whatever recommendation that Union Finance Commission does or Union Finance Commission gives, right, those recommendations are often accepted, not often, always accepted, most of the time those recommendations. But the state level, if I talk about whatever recommendation that State Finance Commission extends to the state, this unhealthy practice has developed that not most of the state has followed the recommendation of the state finance. They do ignore the recommendation of the State Finance Commission. So for example, if the State Finance Commission has sought the transfer of 2000 crore to these Panchayati Raj institution and urban local bodies, they'll hardly get 1700 crore or 1500 crore, and in few states it goes on to 500 crore itself. So this is not, means whatever figures that I am extending right now, that figure is not correct. It is just to give you an idea, right? So that is the problem with the devolution from the state, that states themselves are crunched, and hence often suggestions of the State Finance Commission for the devolution of funds is ignored, leave alone the discretionary fund from the state, right? So the suggestion from the State Finance Commission itself is ignored. So what you talk about these grants, right, they generally do not extend those grants as well. So that is the first problem. The second problem, whatever funds that these state devolve to these Panchayati Raj institution and urban local bodies, even those funds are untimely in nature. So if the financial year is from April to March, right, funds would generally be released in the January. January means from April to December, there will be no release of fund. From April to December, there would be no release of funds. Suddenly in January, you will see, notice, there would be, means if suppose Panchayati Raj institution or Panchayati Raj ministry of that particular, so if I talk about the state, so let us take example of Bihar. Right, so Bihar, or for that matter any state, state does have this Panchayati Raj ministry, right? Now Panchayati Raj ministry suppose was allocated from the budget 5,000 crore to be given to various urban local bodies and Panchayati Raj institution in their state. Now, what Panchayati Raj, and that has been practiced not of Panchayati Raj ministry alone, that has been practiced in India from of various ministry. Almost every ministry, be it at the union level or be it at state level, this practice is adopted. So 5,000 crore has been allocated to this Panchayati Raj. Now this Panchayati Raj ministry will wait until January or will wait until December of that particular year, and they'll start releasing fund to these PRIs and urban local bodies in January. Now there is only 3 months left in that financial year, and every urban local bodies and district panchayat will start getting funds suddenly. Now in January, if you are getting, so only 3 months time you are getting for the planning as well, right? You have to plan that what is your requirement, and thereafter you have to hire the contractors for that plan. If you have to build road, if you have to build certain kind of infrastructure, you have to build this healthcare center, if you have to build infrastructure for primary school, right, you will have to give tenders, invite tenders. After that tenders, there will be contractor. Thereafter you will have to concentrate on execution as well. On all these things, this planning, this execution, this tender publication, all these things has to be done within a span of 3 months. So you did not get enough time to spend on planning, to decide on your priorities, because you never knew that what amount of fund my district panchayat, right, or a particular urban or my city as a mayor, right, I need to know that what are the funds that is going to come in what particular month. When in lack of information, in lack of absence of that information, right, I may not be positioned to plan the things in right manner. So all these planning, execution and monitoring, all these things has to be done in 3 months, right. That will lead to suboptimal utilization of funds, right. I'll have to, as a mayor or as a ward councillor, I'll have to do everything in hurry, because I know that in 3 months, if I could not utilize this allocated fund, right, this fund will again go back to state consolidated fund, right. And that is something called this March rush phenomena that you would have read in economy. If you have not read, concentrate this March rush phenomena. Although various department or various ministries are trying to reduce this March rush phenomena by bringing reform, and that reform is that almost every ministry has now been advised. I mean, many a state has implemented this idea, not all the state, but many a state has implemented this idea that suppose a particular ministry has been allocated 5,000 crore, so there would be 4 quarters, quarter of 3 months, right. So there would be 4 quarters, so they will be suggested that from April, in the first quarter you have to spend this much of money. So say in the first quarter you have to spend 1,000 crore, in the second quarter again you have to spend 2,000 crore, in the third quarter again you have to spend 1,000 crore, and in the fourth quarter you have to spend another 1,000. If you do not spend amounts in this manner, right, this amount will go back, which will lead to reduction in this last moment decision. This kind of reforms are implemented, that in particular quarter it has been defined that you have to spend this much money, otherwise that money will go to the state consolidated fund, right. That will lead to avoidance of this March rush phenomena, right. That will reduce this suboptimal utilization of funds of Panchayati Raj institution and urban local bodies, right. So the recommendation in this regard is that the devolved payment from a state should be in predefined installments, right. You should define that in what month or in what quarter a particular Panchayati Raj institution and urban local body is going to get how much of fund, right. If they have this information, they can plan their priorities, they can plan these tenders, they can plan these contractors, and they can that will be optimal utilization of funds, and not in last 3 months of the year at the state's own financial convenience, right. Most panchayat and urban local bodies hold current account, and there should be possibility or feasibility of electronic transfer for the, so right now the transfers are done in a traditional manner. What transfer that we should adopt? So the second recommendation is that the possibility of this electronic transfer means most of the state right now, if I take example of Karnataka, most of the Karnatakas Panchayati Raj institution, they do hold current account in various bank, various cooperative bank or regular bank. So feasibility of direct transfer of fund, right, should be taken. In Karnataka in 2005 this experiment had been done, and due to this experiment they had noticed that whatever funds that state was sending from their consolidated fund, which was earlier taking 2 months, now they took in 2005 they took only 12 days. So that is the second reform recommendation as far as devolution of funds from the state is concerned, right. So those are two recommendations. Now if I talk about the second source of funding, so second source of funding was union. So union was granting the money, or union was extending the money to these Panchayati Raj institution and urban local bodies for the implementation of scheme, right. As far as devolution on the recommendation of this Union Finance Commission UFC under Article 280 was concerned, that is happening, right, and there is no recommendation in this regard, right, that is happening in a right manner. As far as implementation, the second source through which union was giving funds to these Panchayati Raj institution and urban local bodies was for the implementation of centrally sponsored scheme, because centrally sector scheme are implemented directly by central agency themselves. So that is the difference between central sector scheme and centrally sponsored. There are other nuances as well, but that is not the scope of this particular chapter. So as far as implementation of centrally sponsored scheme is concerned, implementing body is this Panchayati Raj institution and urban local bodies, right, they are implementing bodies. Now the problem associated with this funding is that most of the time center, while giving recommendation or while extending these funds to these Panchayati Raj institution and urban local bodies, right, what they do is that they do find that these urban local bodies are not capacitated, they are not, their personals are not trained enough to implement this scheme, right, because to implement schemes as well there is certain level of expertise that is needed. So suppose there is some scheme in the health sector. Now if they do not have these Panchayati Raj institution, district panchayat or intermediate level panchayat, if a health related scheme has to be implemented, they need to understand, these people should have on their panel few doctors, few health professionals who could understand the nuances of this health scheme and could implement these schemes in a proper fashion. If there is some infrastructural scheme, right, for the creation of some infrastructure, then at their panel there should be architects, right. Similarly, if there is any scheme, centrally sponsored scheme that is dealing with the education, then there should be some educationist available on the panel for the assessment or for the implementation, for the proper implementation of that centrally sponsored scheme. Now most of the time you will notice that these urban local bodies, as far as cities, as far as urban local bodies are concerned, they may hire such personnel, but as far as Panchayati Raj institutions are concerned, they do not have such kind of person or such kind of expertise available at their disposal. And in lack of that expertise or in lack of that capacity on the Panchayati Raj institutions part or urban local bodies part, these schemes are transferred. For the implementation of that scheme, few parallel bodies are created by the central government or the state government or some special purpose vehicle. What are these parallel bodies? What is this special purpose vehicle, right? This is an economic topic, so you will read that there. So some parallel body, instead of granting this implementation of that particular scheme where expertise is needed, instead of granting that scheme to the Panchayati Raj institution and urban local bodies, the scheme implementation is transferred to these parallel bodies or special purpose vehicle or any NGO which are the people who are expert in the implementation of that particular sector scheme, right. So the approach, the recommendation that we should be taking in this regard is that instead of transferring this scheme, implementation of this scheme to these parallel bodies or to this special purpose vehicle or NGO, union or state, what they should be doing is, either union or state, that you should capacitate, you should train these people at the district panchayat level, you should train them to understand the requirement of the implementation, that what is it takes for the implementation of that particular scheme, and thereafter training them, right, they should transfer the implementation to these urban local bodies and Panchayati Raj institutions, right? So after every election, you do have new district panchayat or intermediate level panchayat or a council at the urban local bodies. So out of that district panchayat, right, whatever members, so suppose at the district panchayat level there are 45 members that has been elected. So out of 45 member, what union or state can do is that they can pick up 5%, and those 5% can be given some sort of training, right? Training so that they can become expert to understand the requirement of the scheme that is supposed to be implemented. When they do have this logical understanding of to understand the requirement of that particular scheme, they would be in position that, okay, this is a health related scheme, let me hire a doctor, let me hire a health professional who could advise us that how do we follow, or what approach we should have in the implementation in order to implement the scheme properly, what approach we should be taking. So that is going to be a recommendation. So instead of transferring these to these parallel bodies, union and state should be what they should be doing is that they should capacitate these people. Now the second problem, the first problem was lack of capacities. So to that we gave recommendation that they should be capacitated, they should be trained. The second problem with this scheme specific assistance is that most of the time these funds that these people, PRIs and urban local bodies, for the implementation of that scheme gives, right, so those funds are tied with the specific objective, right? So that is second problem. They cannot, these people, these villagers or gram sabha or village panchayat or district panchayat cannot utilize these funds for their priorities. Their priorities may be different. So if I take example again of Kerala, so suppose this is a coastal state of Kerala. Now a scheme, a centrally sponsored scheme has been designed for the implementation or for the creation of primary education. Now the infrastructure for the primary education in Kerala, the density of primary schools is very high in Kerala, right? Now this centrally sector scheme has awarded 500 crore for the implementation or for the creation of primary school or for the creation of this infrastructure for the primary school. Now they already have these many schools. Why should they create these primary schools again? But the stated objective of this centrally sponsored scheme that you have to create. So they'll end up creating these infrastructure which was not needed. Rather, if you would have given a broad objective, so in that regard, what our recommendation would be that union, while designing this centrally sponsored scheme, what they should be doing is that instead of being very specific that as a state you should do this, right, they should be doing is that they should be defining the broad objective, right? So from education sector, if union want to invest some money, they would be expecting some outcome, right? That point we already have discussed prior to that as well. They would be expecting that dropout rates should reduce, right? Research paper published at the PH level, so research paper publications should increase, right? So they should be, instead of being specific, they should be issuing the broad guidelines, the broad objective. If there is any health sector scheme that center is designing, so instead of asking that these many hospitals should be created, physical infrastructure for these many hospitals should be created, what they should be giving, target that they should be giving to these districts is that we expect that these many IMR, infant mortality, what is this infant mortality rate, right? So this infant, number of infants that are dying into the hospital per thousand, right, that should reduce. Maternal mortality rate should be reduced. So if maternal mortality rate today is 260, then it should be coming in next 5 years, I expect 205. If IMR is 750, then IMR should coming down to 540, let's say, right? So these kind of broad objective they should design, and as far as project creation for the implementation of that particular scheme is concerned, that should be left to the state, that should be left to these Panchayati Raj institutions. So that is second recommendation, that instead of tying the funds with the specific objective, right, as a union in that central sector scheme, while designing the scheme, you should just build the skeleton of that body, right, and leave the project implementation, leave this flesh filling, leave this hair transplantation, leave this ear putting, right, all those things should be left to these Panchayati Raj institution, so that they could decide. Now means you have trained them enough, right, train them, capacitate them. After training them, when you have realized that yes, they now do have capacity, thereafter this hair transplantation or ear putting or nose putting, that should be left to what you call these Panchayati Raj institution and urban local bodies. Practice of parallel body creation. What is this parallel body creation? So you do create, unions do create parallel body for implementation of these schemes. So practice of parallel body creation for the scheme implementation should gradually end. धीरे धीरे ये खत्म होना चाहिए. ये practice already created bodies should be organically, whatever bodies that you already have created for the implementation of scheme, the bodies in addition to these Panchayati Raj institutions, those bodies should gradually organically linked with these Panchayati Raj institutions, so that they are responsible to Panchayati Raj institution and urban local bodies. Centrality of PRIs, Panchayati Raj institution, in implementation means you should give central role to these Panchayati Raj institution and urban local bodies as far as implementation of this central sponsored scheme is concerned. So I hope what are the problems with the scheme specific grants, scheme specific transfers, and the recommendation, associated recommendation, you will have by now understanding. So now we are moving to the next slide to discuss the next funding mechanism, and the next funding mechanism is this internal resource generation. What is this internal resource generation? Broadly we already have an idea. So there are certain tax mechanism, there are certain non-tax mechanism through which these urban local bodies and Panchayati Raj institution do get money from. But before discussing this internal resource generation, let us have a look on the data, and this data has been provided by second ARC, Second Administrative Reform Commission, that submitted its report in 2008, right? So what is this data about? So this data is about the total amount of money that Panchayati Raj institution had got in year 1998 and 19. So this data may be 21-year old right now, but this data does have relevance even today. If you see in 1998, 1999, this is the amount, this is the number of crores, 17,295 crores of the amount that all the Panchayati Raj institution across the nation had got from various states, from the center. Now here is the breakup of their sources. So if you see, most out of the 17,295 crores, right, 9,744 crores of the money that these Panchayati Raj institutions have got, that is in form of grant in it. If you look at the legends, so these are the legends and these are the colors. So out of 17,295 crores of rupees that Panchayati Raj institutions have got, that out of that 9,744 is in form of grant in ad. So grant in ad they receive from center and state as well. So this 9,744 crores translate into 56 or 55% of the total amount. So whatever amount that these Panchayati Raj institutions have got, 55% of the amount they received in form of grant in ad. Another amount, if you see, that is this 1160 crores. So 1160 crores they have in form of assignment and devolution. If I talk about the own revenue, the most important thing, own revenue. What is this own revenue? That is their own income from various tax sources and non-tax sources. So their own revenue is only 1167 crores, and that will hardly translate into 5 to 6% of the total money. Right, if my again maths is correct, right, you can correct me. So 5 to 6%. So only 5 to 6, whatever amount that these Panchayati Raj institutions got in 1998 or 1999, right, their own internal resource generation capacity was only 5 to 6%. And you might think that this is why I am showing you 21-year-old data. See, the actual amount that these Panchayati Raj institution and urban local bodies is today generating, that may be in order of 1 lakh crore. So here you have this 70,295 crore. Today if I do multiply it with 6, it will translate into some 102 or 1 lakh crore. Let us take an example. Let us take a hypothetical figure. So if they are getting this 1 lakh crore total amount, out of that 1 lakh 1 lakh crore, even today most of the amount that they are receiving is in form of grant in ad. So the percentage figure that we were talking about, that 55% they were getting in 1998, 1999, right? So 55% if they were getting in 1998 in form of grant in ad, that figure, that percentage even stands true today even, right? So that is, now why I am pointing these numbers? I am pointing these numbers just to highlight that the internal resource generation capacity of urban local bodies and Panchayati Raj institutions in our country is very poor. They are very incapacitated. And let us try to understand that this finances form lifeblood of any organization. If you do not have your own independent financing mechanism, if you do not have, even in normal life, if you do not have your own finances, right, your decisions will be influenced by those financiers, be it parents, be it any friend, be it anybody, right? As an organization, if you are working, if you do not have your own finances to fund your startup, if you are raising funds from any of the angel investor, any of other investor, terms will be dictated by that investor rather than you deciding the terms that how your organization should run, right? It is those investors who will be dictating the terms, right? And that's why finances are called lifeblood of any organization. As an urban local bodies, as a Panchayati Raj institution, if you are not generating or if you do not have resource generation capacity, right, your again decisions will be, or your priorities will be dictated by the state, your priorities will be dictated by the union, right? And that is what I wanted to reflect by showing you that today even these urban local bodies or Panchayati Raj institution has been able to generate only 5 to 6% of their resources. Rest of the finances that they do get, right, they do get from this grant in ad or in form of loan or in form of any kind of devolution from state. So that is their resources, that is about their resources. Now what is the problem? What are the problem with if you are generating, if you are not generating, and why they are generating only 5 to 6% of the grant? So their first reason is the political reluctance. The first reason is political reluctance. What is this political reluctance is that, hey, when you had this 73rd constitutional state 73rd constitutional amendment, what had been envisioned that there would be transfer of function, there would be transfer of finance, and there would be transfer of functionaries, right? So functions has been transferred, but as far as transfer of funding is concerned, they have been totally hanged on the devolution from the state or the grant in ad from the state. As far as giving them taxing mechanism, giving them areas where they could tax, this municipal corporation or Nagar Panchayat could tax, so that they do have enough resources to fulfill the obligation that has been transferred to them. That taxing mechanism, they do not have much taxing mechanism. Whatever area that they have been granted, like, okay, you can tax this particular area, you can tax this particular, you can tax this parking fee, you can tax this luxury on the restaurant, you can charge some fee, on the from the cinemas houses you can charge some fee. So those taxing mechanisms are not enough to generate the level of resources to fulfill the functions that they have been assigned. So that is the first problem is because of the political reluctance to transfer the mechanisms of funding. The second problem, if I discuss, whatever level of finances or whatever level of taxes that they have been empowered with, that okay, these areas, means if I talk about this house tax, so suppose they have been given, not suppose, they have been, most of the urban local bodies have been given power that they can collect this house taxes. Now due to corrupt practices, there is under assessment. मीन्स अगर कमर्शियल सपोज हाउसेज किस टाइप का होगा, वन वुड बी फॉर पर्सनल पर्पजेज एंड अनदर प्रॉपर्टी मे बी यूज फॉर कमर्शियल पर्पजेज. सो इफ आई डू own two properties, one I am owning for my residential purposes and one I have rented to some company. Now the tax on this residential property will be less. As far as taxing that rented property which is running this commercial business, right, on that tax will be high. Now what I can do, or what in collusion with these municipal corporation bodies can do, that I can get the status for that commercial building as well. I can get the status of residential building for that particular my second property. if I got that status, right, that will be under assessment, and through that under assessment, because I colluded with these municipal corporation people, right, this exchequer of municipal corporation would be at loss, right, that will lead to the under assessment. So that is happening not only into this house. I just took one example that is happening at the municipal level or the urban local bodies level in many whatever taxing areas that they have been granted, that under assessment is happening in all those areas. So these are two major problems. Let us see all these things in textual format. So you have heavy dependence on the union and state that we already have seen, right, in form of grant. It is the union and state that is granting them money. So they do have this heavy dependence on the union and state for finances, which compromises their autonomy and efficiency or independence both. Responsibilities that they have been assigned, the functions that they have been assigned do not matches finances. Many of the critical functions like primary health, minor irrigation, solid waste management require handsome investment, but matching source of taxation has not been devolved, right. Panchayati Raj institution and urban local bodies taxation area are very thin, poor internal resource generation, right. Under assessment of taxable resources, the house tax that I was talking about, due to corrupt practices and inefficiency in collection of tax or user fee. Example, house in jurisdiction of Panchayati Raj institution and urban local bodies are not evaluated for their uses, whether that is being used for the commercial purpose or personal purpose. Assessment may be error hota hai because of collusion. Owners area at times doesn't deposit charges or taxes under the political patronage, right. So I hope these are the problems with the internal resource generation. If you see what are the sources through which these people get taxes from, right, so it is by property tax, it is by user fee from the water charges, some sanitation charges, some entertainment tax they can have on what you call these cinema halls, right, these multiplexes, then they can charge this restaurant. If district panchayat want to charge, so they can charge some kind of royalty. In the mineral extraction, the companies which are extracting minerals, so they can some kind of, although royalty is charged by the state, but some kind of a taxing mechanism by the state can be provided to these people as well, to these district panchayat as well. They do this charge this toll, they do also charge from the company employees this professional tax, right, fee for providing and maintaining this land record. Amusement parks they can create. So for example, amusement in my city there are 4 amusement park where they do have installed facilities for gym, they do have installed many a kind of facilities, stadiums they can create, libraries they can create, certain in lieu of providing these libraries at the commercial level, they can charge some fee. So there are various avenues, right, when economic development is happening, right, various avenues are being opened up, and those avenues can be tapped by these municipal corporation or nagar panchayat as well, depending on that what is the requirement of that particular city. Some tourist fee, if a particular city like Jaipur or Delhi, right, so they can charge some kind of tourist fee, right, they can charge these kind of fee on heritage buildings. So those kind user free from services like auditorium, Kalyan Mandapam in the south, right, lease of wasted unused property, charges on charges on irrigation, right. So these are the sources of their through which they generate this internal resource, right. So the problem associated with these kind of resource generation, we already have seen that there is cases of collusion, there is cases of inefficiency, there is not enough devolution of finances, right. There has been transfer of the responsibility, there has been transfer for the functions, right, functions has been transferred, but the matching level of finance generation has not been extended by the state. So these are the problem. Now what would be our recommendation in all those regards? So our recommendation in all these regards would be these, that PRI's own resource generation is soul behind its financial standing. They should be allowed to tax in more areas, right. Such taxation, since they are more closer to the people, will also ensure their accountability. If you are taxing people as a mayor, if I have evolved or I have devised a new kind of taxation, right, I'll have to, if I am not providing services to my citizen, so if I collected 1000 crore in a particular year, as a mayor or as a council or as a ward councillor, if I collected or a municipal corporation has collected 1000 crore by creating additional taxing mechanism, and if from 1000 crore, if there has not been matching level of services that has been provided to the people of that area, there would be direct accountability of that mayor, because to mayor, to this ward councillor, we know directly, right? We know these people directly. We can reach their house. They are accessible. They are not inaccessible as MLAs or MPs, right? We can go to their house, we can ask questions. So direct taxes always ensures accountability from these institutions. This point we need not to discuss. You can read this. With economic development, new avenues have opened up, and Panchayati Raj institution and urban local bodies should be encouraged to tax tourist places, luxury hotels, restaurant and cyber cafe. So these are the recommendation as far as internal resource generation is concerned. Now we are moving to the next slide. There is one more recommendation that is pending in regards to this internal resource generation, and that is about allowing these urban local bodies and Panchayati Raj institution to access money, to assess the money from these banking or financial institutions. So the urban local bodies which does have sound accounting, which does have their financial records are sound, they can be allowed to get credit by creating bonds. So bond hitherto creation, getting money from these bonds, right, has been the domain or forte of private sector companies only, right? But these urban local bodies, municipal corporation, large municipal corporation that is existing in Bombay or this MCD, they should be encouraged. Rather, Allahabad municipal corporation has already raised fund from this bonding, right, earlier, and there are many municipal corporations that are raising funds through bonds, but more and more urban local bodies should be encouraged too, but only those municipal corporation which does have this sound financial accounting, right, only those should be allowed, right, to assess these bond markets, and they can raise if there is some infrastructure, big ticket, some flyover is to be created. So suppose a city has creation of this requirement of creation of 10 flyovers. Now these 10 flyover, for that if they need 1000 crore, so those 1000 crore can be raised from either from bank or a microfinancial institution or bond market. They can build these flyover, and thereafter from the toll that they do collect, right, from the toll collection, they can return that kind of loan. So that avenue should also be opened up for these urban local bodies or Panchayati Raj institutions. So I hope whatever sources of mechanism that we do have, what are the problems associated with those kind of financial mechanism and the recommendation, you will have clarity on. After having discussed this topic, let us move to the next leg of this video, and in this leg we'll discuss the reasons for suboptimal performance of these PRIs, Panchayati Raj institution and urban local bodies. So remember, when we were introducing this video, in the introduction part itself, we had discussed that there was certain stated objective of this 73rd and 74th constitutional amendment. So what were those stated objective of 73rd and 74th constitutional amendment? So to take this democracy to the grassroots, to this Panchayati Raj institution, to this third tier of governance. Then the second stated objective was political empowerment of the weaker section or the other people as well. And the third objective was to bring this administration and governance closer to the people. There we had assessed again in the same video, in this video itself, that to what extent we have been successful in bringing these objectives or in attaining these objectives. Now there are certain reasons actually due to which those stated objectives could not be completely realized. The objective that we had in 73rd and 74th amendment, there are certain reasons, there are certain obstacles due to which those stated objectives could not, means the potential of those stated objectives could not be tapped completely, and the reasons are this multiple reasons we do have, and all those reasons that you can see on the slide, these reasons in one form or another we already have discussed in last 5 video that we had on the Panchayati Raj institutions and this urban local bodies. So the reason in detail I am not going to discuss, only those reasons which I think I have not discussed in any video, only those aspects will have an analysis, otherwise other things I'll just give a passing reference. So lack of adequate devolution, that we discussed in the same video, in this video itself, when we were discussing the devolution from the state. So I had given example that there have been transfer of function, but there has not been matching transfer of the taxing resources, right? So that is the first reason why these Panchayati Raj institution, because in lack of finances, when these finances are considered as a lifeblood of any organization, and when you do not have your own finances, your decisions, your autonomy, your independent functioning will be compromised. So the first reason is the political reluctance or the state's reluctance to transfer the matching financial resource generation sources, right? The second is the excessive control of bureaucracy. What is this excessive control of bureaucracy? So at the execution part, when we were discussing this structure of municipal corporation, when we were discussing a structure of municipal council, Nagar Panchayat or the Panchayat, if you see whole of this body, the execution part or executive branch of these bodies is dominated by the bureaucracy. Who are these municipal commissioners? Are those people elected? No, municipal commissioners are these IAS officers, and those are appointed by the states, right? So yes, does not matter how good your policy design has been by these ward councillor, or does not matter how your policy designs are by these experts, right? If the implementation part is not good, right, which is controlled by this bureaucracy, and bureaucracy, the alternative name for this bureaucracy is nothing but the red tape, the delays it is known for, right? So it is because of excessive control. And moreover, apart from, if this ward council or if this Nagar Panchayat or if this municipal corporation is dominated by the opposition ruling party, right, then again does not matter how good their planning has been and what their priorities are, right? Because state does have control, and this happens in practically, right? This perhaps you cannot cite in the written format, but these things happens in practical, that these IAS commissioners get political pressures from the upper level, from the state government level, if that municipal corporation is being dominated by the people belonging to the rural party. So they do plan, they prioritize the things. These councils in the urban local bodies will plan things in a good manner, they will prioritize, but often there will be delay in the implementation. Then what is this tide fund? So tide fund, again we had discussed in this when we were discussing this central sponsored scheme, right? So the funds, the devolution of fund that we had seen from the union for this implementation of central sponsored scheme, there again we had seen that those funds coming from the union for the implementation of centrally sponsored scheme is in form of tide format, right? So again that fund cannot be utilized by these urban local bodies or Panchayati Raj institution for their own priority, dependency on the government funding. So this is almost same. Reluctance to use fiscal powers. What is this reluctance to use fiscal powers? So this point as well we had discussed when we were discussing this collusion and under assessment of the property. There we had discussed that whatever little amount of financial power or taxing power that these municipal corporation has been given under political patronage, because see, ultimately these ward councillors are what? They do have these ward councillors who have been elected, right? They do have their own political aspiration. After ward councillor, they want to contest for MLAs, right? So if their the voters who have elected them, right, in the pressure from these voters, they do take suboptimal decision, the decision which may not be in consonance with the good thing of these municipal corporations. So the interest of municipal corporations will dictate more taxation. People should be taxed more. But if he takes a decision which leads to taxation of more people or more taxation of people, then he will not be elected, right? So he will not, this ward councillor will ensure that anything which pervades any kind of fear or which leads to any additional tax, right, he will not take. This ward councillor, even if it is in interest of that municipal independent functioning of municipal corporation, these ward councillors will not take that decision, because they know that any further burden, any additional taxes will irritate my voters or citizen in all, right? So he will not take or he or she, these ward councillor generally, even if they have been given power to tax certain areas, they will not tax for the political reasons. So that is the thing. Creation of parallel bodies, we already have talked about that while implementing this central sponsored scheme, union or state does create these parallel bodies because they feel that these district panchayat and urban local bodies are not trained enough to handle implementation of these schemes, and that's why. So this creation of parallel bodies again hinders the growth of a Panchayati Raj institution and urban local bodies. Then they do have this poor infrastructure, right? So it is also a reason why these Panchayati Raj institution and urban local bodies has not been able to perform or has been able to yield the results that was expected in 1992 by 73rd and 74th constitutional amendment. So I hope you will have clarity on these two topics as well. So with this, we are wrapping up this urban local body chapter as well. From my best of understanding, all the topics has been covered. If you feel that any of topic of this urban local body has not been covered, you can recommend me. I can have an additional video and that on that topic as well. So now we are entering into last leg of this video with the 3 MCQ for you to attempt. So first MCQ, second MCQ, and this is the third MCQ. So these are the 3 MCQ in addition to one question, the difference between centrally sector scheme and center sponsored scheme. So those are the 4 questions that I expect you to attempt. Until we come up with the next video, till then, bye bye.